Before we get started, I have a quick favor. I've been self-funding the Finding Genius podcast for 5 years now. I've done over 3,000 episodes. And as you can see on YouTube, we're up over 1 million views on the channel, which is fantastic. The next thing I really want to push on is to get up to 10,000 subscribers. Because once we do, we'll be able to put a donate button and we'll be able to solicit donations to help keep the podcast running and to also get the Finding Genius Foundation moving along. We have a big project studying anxiety, depression, and PTSD and working on a product to help people overcome these problems because I've seen them explode recently after the last 2 years of the whole virus situation. So if you would, please subscribe to the podcast. That would help us tremendously. Give us a thumbs up and check in the description for Buy Me a Coffee. It's about $5. If you could buy me a coffee, I'd really appreciate it. It would help keep the channel going, and I love coffee. Thank you.
Forget frequently asked questions,
common sense, common knowledge, or Google.
How about advice from a real genius? 95% of people in any profession are good enough to be qualified and licensed. 5%
go above and beyond.
They become very good at what they do, but only
0.1%
are real geniuses. Richard Jacobs has made it his life's mission to find them for you. He hunts down and interviews geniuses in every field: sleep science, cancer, stem cells, ketogenic diets, and more. Here come the geniuses. This is the Finding Genius Podcast
with Richard Jacobs.
Hello, this is Richard Jacobs with the Finding Genius Podcast. My guest today is attorney Steve Hayes. He's a tax attorney and chair of Americans for Fair Taxation. The website is fairtax.org, and we have been talking about various policies of the current administration in regards to tax and what may be coming, what may be changing, and how it's going to impact us all financially. So welcome, Steve. Thank you for coming.
Richard, it's a pleasure to be with you. Thank you for having me.
Well, tell me a bit about your background. So you're, as you go from regular tax attorney to being concerned with, I guess, higher level or federal level type issues and, philosophy of tax and things like that.
Well, my wife says I woke up. Basically, I had started off doing tax work and was making a fairly large amount of money, saving people taxes. I was involved back when tax shelters were legal in the 70s and 80s with doing those. And I started looking at things and I started realizing that every time that I, along with my friends, came up with a plan that would help our clients reduce their taxes, it was countered by the IRS, either getting Congress to pass a bill that not only limited what we were doing, but also took a wide swath of other things out of the playbook, so to speak, of allowable ways to work. But also they did it through rather abusive types of audits where they would come in and allege discrepancies, even though there weren't any.
Just because you were dealing with conservative clients, or were you just dealing with not the absolute most powerful people that can get private letter ruling?
I was dealing with both. Okay,
that's why it was a problem, I see.
Yeah. I had some who were very willing to fight, but I had a lot of them who were making very, very good money, but they were looking at potentially having to pay $50,000 to $100,000 to dispute a tax fight, and we ended up having to settle. And again, a lot of the times it was totally incorrect, but we would settle. And I started looking at this and I realized that the tax code was frankly discriminating against people who work, because the more money you made, the more successful you were, the more tax you paid. And I said, well, okay. Philosophically, the idea was, that the more you make, you should be paying more back into society. But at one point, it began to look to me like it wasn't just for social equality, it was really punishment. And that's the way it was being applied. And the more I got into it, the more I just decided that it was unequal application. Richard, I have clients that invested in the same partnership in 5 different states that would be audited, and they would get 5 different results. You'd have one that had no change. You'd have one that owed a lot of money. You'd have one that owed a little bit of money in various things.
So this is at the federal level, not the state level.
Federal level, federal
Right.
income. And it was just an absolute, terrible thing because there was no predictability.
Well, what about the case law? If someone got a favorable result, why couldn't you use that as case law in front of the judge and assert the other?
It only applies to that individual, like the private letter ruling, only to that individual. If someone got a favorable result in one state and not in another state, it was not binding in any way. You'd have to litigate it in order to make it binding. And even then, the tax court case would not be binding across the country. It would be useful, but not binding. So,
Well, I mean, in other areas of law, though, like Miranda, there was a guy, Ernesto Miranda, that based on his case law changed. There's been a lot of this stuff.
Supreme Court to do that. If the Supreme Court rules, it absolutely applies all over the country.
Otherwise, it'd be the same thing.
Right. If the circuit rules, like let's say the Fifth Circuit, it only applies in the Fifth Circuit. That's why in most of the cases that get to the Supreme Court are because the Fifth Circuit says it's true and the Ninth Circuit says it's false, and the Supreme Court resolves.
Is there such a thing as, let's say you get a particular result on a certain kind of tax structure and you got 10 of them over time? Is there some point where you could have enough of them grouped together where you could then, petition to have the Supreme Court hear it and they're more likely to, or because of the number of cases that have gone a similar way that would establish enough for precedent for other judges to follow it?
Well, if it's rulings, yes. If there are enough cases that come out in the same way on an issue, that normally becomes very, very powerful if it's being challenged in another jurisdiction. You can say, look, 9 other judges have heard this and they've all come to this conclusion. We don't believe there's any basis for you not being number 10. And I think that's very persuasive. It doesn't necessarily mean that they're required, because they're not, but it is persuasive. So you're right, it does have an impact. But I just decided that it was a very bad system and that I really wasn't doing the kind of things that I wanted to do in terms of helping people with their business as much as trying to help them skirt around the tax law or comply. Frankly, you can have people in a different way, but have different companies, and you see this all the time now across the country, that will take a tax position, let's say on depreciation, and they may get one agent that says fine, and another agent in another part of the country says no, it's not fine. So it became to me a morass of uncertainty and unfairness, frankly, because the people, like you said, who could get the private letter rulings, I had clients that could spend $500,000 on a tax case and still be okay. But I had clients that $50,000 would make a dent in their life. And
Right.
so it basically became that. And that's when I decided to start working really less in the tax area and more in the business area and entrepreneurial area. But my wife says I'm a recovering tax attorney. You never get away from it. I still keep up with it. I still have to do it every day, but it's not my main focus anymore.
So what do you do now?
I do general business work now, where I have companies that want to acquire other companies, or I have companies that need to settle a dispute between themselves and a vendor or another company, and that keeps me pretty busy.
Well, I mean, do you also include any tax advisory in your work, or you need to keep that separate?
No, I coordinate it with their tax officials. Like, I know enough to go in where I can point out things and typically understand what the tax advisor is saying. Sometimes it results in me recommending to the client they get a different tax advisor, and I've done that. So I have enough information. I keep current enough. I understand it, but I started a group back in 1990 to get rid of the income tax, Richard, and replace it with a retail sales tax. And I've always felt
that,
like conflict of interest.
Do you like a value-added tax?
Retail sales tax. It's like a value-added tax, but a value-added tax is a tax that's levied on every step of production of a product. When you cut a tree down, you add a value to it when you sell it to the mill. And when the mill processes it and sells it as paper and lumber, adds value, and you pay the tax there. The retail sales tax would be like most people are familiar in 45 of the 50 states. You go to the store, the grocery store, if they tax food, or department store, and you make a purchase and they say, okay, that'll be $24 plus another 7, 8, 10% added on, which is a sales tax. This would be a federal sales tax, it's an excise tax. It's actually one of the taxes that was provided for in the Constitution in Article 2, Section 8. So therefore, you've got an excise tax at the federal level, and you've got a state sales tax at the state level. And the fact is, if you do that, you can give someone like yourself their entire paycheck because you no longer are taxing income in any way. And that's really the basis of this. If you're going to replace the income tax, literally, you've got to go to a different form of tax. And you said another one would be consumption tax, like a value-added tax. But we thought that the retail sales tax would be much easier. We designed it so that there would be a credit for every American up to the poverty level for their family size. So a family of 4 would basically pay no fair tax, is what it's called now, on purchases of new products and services up to $40,000. And then above that, they would pay a 23% rate. So it's a way of bringing in revenue for the government that eliminates the income tax and the payroll tax funding. Social Security is still there. In fact, it's more solvent because it's being paid for not by a decreasing number of workers relative to an increasing number of retirees, but it's being paid for by every American that consumes. So we think that's pretty well.
What do you think is likely to happen? What do you think is likely to happen with Social Security over the next 5 to 10 years?
They're going to have to either change the funding method, which is what we're proposing, or they're going to have to greatly increase the amount of Social Security tax and extend the time for when you can qualify to be on Social Security. Like right now, you can take early retirement at 62. I think that's the studies that I've read is if you raise the rate 2% and extend the retirement age where you can retire by 3 years, you've added 15 to 18 more years to the Social Security fund. So that's the issue, though, because a lot of people have been counting on, like that calendar clicking over until they're 65 or 62 or whenever to retire. And so you're going to have to say that only applies at an earlier age, like saying, at your 50. Everybody under 50, you can't retire until you're 65. So you're going to have to raise the rate on companies and employees probably by 2 to 3 points in order to make it functional. But even then, the studies show it only extends the life another 10 to 15 years. It does not permanently solve it.
Yeah, but 15 to 18 years in the political world, 15 to 18 years of kicking the can down the road is perfect for the political world.
It is exactly what I think they'll do if they continue to have an income tax. But you've got, for the first time ever, a president who's saying he doesn't like the income tax. He'd like to get rid of it. You've got a Secretary of the Treasury saying it would be good to get rid of the income tax. And you've got a Secretary of Commerce saying it'd be good to get rid of the income tax. So you've got a lot of attention now on it. Now, they just passed the bill. One side calls it the big, beautiful bill. The other side calls it the big, bad bill. But it's a, permanently setting it. And permanent's I always laugh, Richard, and I'm sure you do too, because permanent just means until the next power change.
Right.
President and Congress in 3 years could change it totally. It could become totally different than it is today. But at least it gives predictability for 3 years because Trump's not likely to go back on anything. So you've got 3 years for people can plan. Businesses can plan. In Trump's bill in 2017, you had research and development deduction that was instantly deductible. In the thing that Biden and the Democrats put in, it became portioned over a number of years. So you have a lot of people that planned one thing, found out that they owed a lot of taxes, and that really restricted their ability to grow and produce product because of that. So the tax code is so intermingled with what you have to do as a business that predictability is very important.
Do you think that tariffs are going to be a source of any significant revenue, or what's your thought there?
Initially, there will be some significant revenue, but very quickly, you're going to find a couple of factors. One is you're going to find a lot of companies that are going to be moving production plants over here to at least qualify that it's produced in the U.S. And that's going to make a difference in the tariff right there. You're going to have a lot of companies, about 45% of the products that we import are parts for other products made in the United States, whether they be cars, machines of any kind. And you're going to find, I think, and we have so far found that even with the tariffs that are existing, that a lot of those companies are not passing those full expenses on to the producer, the person buying it. They're eating a lot of it. And part of the reason for that is that U.S. goods, products that are made here, if you talk about a product made in China that is 30% more expensive, now it's very competitive to buy that product from Slovakia, perhaps, because I have a client doing that. Or in the U.S., they can source them and still be in that range. So I think it's going to be an interesting thing. The tariff income, at least the economists that I trust and the common sense, frankly, Richard, is that you're going to raise money from people that can't avoid it, but you're going to see a diminishment as they adapt to it and move on. So as a permanent source of funding, no, I don't think so. As a source of some funding, yes.
Okay. What's, I don't know, what is the likelihood of the income tax going away? It's so entrenched for so many years. I just don't see it going away. But what do you see?
Well, we did a Crisis Insights is a polling company that was like number 2 or 3 in the election last term in accuracy, predicting races and predicting the presidency and what the margins were going to be. And they did a poll and they found out that a majority of Americans, not a big majority, but over 50%, Democrats, Republicans, and independents want to get rid of the income tax. Now, it didn't talk about what they'd replace it with. So one poll, one series of questions is not going to make anything happen. But I think that if the president does what he has hinted he was going to do and comes out with a long-range vision of how we get rid of the income tax and the Internal Revenue Service, that there's an opportunity if they hold the House and Senate in midterms next year, there's an opportunity that this president's going to be really pushing to eliminate the income tax. And I think he's going to find a lot of support among the people. You're going to
find out now. When is politically the best time to after the midterms? Then it's safer to do it, or is it not safe now to attempt?
Well, I think he'll start in the next probably 4 months, 5 months. I mean, right now, everybody has got tax fatigue. Nobody in D.C. wants to talk about taxes. The president wants to enjoy his victory, what he perceives as a great victory, and he wants to get on with handling the tariff situation, the trade situation, and he wants to get on with handling, peace in our time, so to speak, and other products. But I really think that come late fall, early winter, and into the beginning of next year, he very well may start hinting at this change. He's already had Lutnick and Bessent, his 2 secretaries, talk about it, and I'm sure they didn't do it without having cleared it with him. So I think that's there, but the safest time, if you're really going to take on something like this, would be after the midterm, because then these guys have 2 years and they have an opportunity to maybe take some bold steps. And if the president is sort of out there promoting it during that time, you got a lot more public support, because, I used to talk when I gave talks, I'd say there are 2 types of people in the United States who don't like the income tax. And there'd be a pause, and I'd say men and women, because when you go out and talk to your neighbor and you say, do you like the income tax? Almost nobody's going to say yes. Now, they may say, I don't know what you'd replace it with. We got to have something. But the income tax, which takes money out of your check before you get it and takes away your ability to decide how much tax you're going to pay, because with a value-added tax, with a VAT, a sales tax, you are the one that make the decision, Richard, of how much tax you pay by how much you spend. You and I can make exactly the same amount of money with the income tax and pay exactly the same tax no matter what. Whether I save my money or you save yours, doesn't matter. But with a sales tax, if you spend a lot less than I do, you're going to pay a lot less tax than I do. But that's your choice, and it's my choice. And I think a lot of people would like to be treated like adults as opposed to kids, where they don't have their money taken away from them before they get it, and they have to be grateful if they get a refund, but where they get their entire paycheck and they can then go out and determine how much they're going to pay. Because under the Fair Tax bill, it's H.R. 25, you're only paying the Fair Tax on new goods. So if you go to Walmart or a department store and you buy something new, you're paying the tax. If you go to a car dealer and you buy a new car, you're paying the tax. But if you go to a car dealer and buy a used car, you're not. So a lot of it's going to be determined by your own spending habits and life and by your need. Now, obviously, if you've got 2 kids or 3 kids, you're making $50,000 a year, you're going to be spending the whole 50. Now, you're going to get a big help on that with the prebate. That's an amount of money that goes each month to equal the tax you would pay based on your income. But in that month, but you're still going to have, you got to feed them. You got to take them to the doctor. You got to do all these things, but you're not likely to be buying new cars. You're not likely to be buying everything new in furniture. You're probably going to buy things that are used, and you're not going to pay sales tax on that, but that's your choice.
So is the IRS just being captured and politicized completely, or what's your thought?
I think that the IRS it's having a huge problem, both operationally and, like you said, from a PR point of view. They're seen in many cases as thug. I've dealt with them over the years. Most of them aren't at all. But sometimes you'll get somebody who's sort of a rogue that gets in, or you get someone who knows that in an audit, somebody comes in and audits you, Richard, and I don't know what kind of money you make, but let's say you're doing okay, and they come in and they say, well, Richard, those travel expenses you have over there, we're going to disallow. And let's say I'm sitting there with you and you look at me and say, wait a minute, Steve, you told me those were legitimate. And I say, Richard, they are legitimate. And I go back at the agent and says, I don't care. They're disallowed. And so afterwards, you and I are talking and you say, well, what's that going to cost me? And I say, well, it's going to cost you another $3,000 in tax. And you go, but that's raw. I don't know it. I know. So what do you want me to do? And I would tell you to pay it because it's cheaper to pay it, even though it's extortion, than to pay me or someone else to go after it and try to beat it, which we ultimately would do. But it might cost you 10 grand in terms of costs to save through.
Well, the government has unlimited money. They can do anything they want.
They act like they can. They actually can't, but they act like they can. And they will, they'll wear you down in that kind of thing. And you've got, I have a friend, and it turns out that the IRS agent that tried this or did this on him was an art history major in college that had about a month of training in accounting. They were auditing, and they didn't really understand his business or, the fact that he had to travel to conventions because that's how he marketed his goods. And she just arbitrarily disallowed some of the deduction, knowing that someone like me would advise him to pay the tax because he couldn't really justify paying a lot more to try to save that. And so that's the kind of extortion that makes people obviously very upset. And it frankly leads to cheating. In our country today, the IRS admits, Commissioner Reddick 3 years ago admitted that there was $1 trillion of income tax not being paid that should be paid. In other words, being evaded. And when I give talk,
there's a lot.
Yeah, I'll ask them, have you ever had an opportunity to buy something for cash, a good or a service, and for a much lower price than if you used a credit card or check? And everybody just raises their hands. And I'd say, well, is that because of accounting problems? Everybody laughs, more complicated. No, it's because they don't want to pay taxes. Because the plumber that showed up at my house, and I said, you need a new disposal. I said, how much will it cost? And he said, $250, this was a few years ago, for cash and $325 for credit card. And I say, why? Does that cost you that much in credit card fees? He laughed. He says, no, I'm not really going to report it if it's cash. And that happens multiple times every day. You've also got people who are working illegally, not reporting. You've also got all the criminals not reporting income. So the amount of money and there's a study on the Americans for Fair Taxation website, AFFT, where it's predicted to be somewhere around $12 trillion over the next 8 years of evasion because it's growing. It's increasing.
But I remember there was like a PO box in New York where like 50,000 refunds went, and they only discovered it after years. And when the news went there, of course, no one lived there, and it's hilarious. The scams that go on.
Well, the scams, and it's true throughout government. Why should the IRS be any different? Look at all those people that got COVID loans from jail. They actually sent back to jail. So yeah, this guy learned that you created a fake company, fake financial, and you sent it in, and you'd get, now these weren't huge numbers, but there would be 20, 30 grand to an inmate. Totally false. And so
would it go into a commissary account?
No, went to them, and then they did what they did with it. And so, and there were some that literally went to the prison. Most of them went to post office boxes that had been created by the family outside. But there's something that actually went to the prison. There have been refunds sent to the prison, false refunds from the IRS. You've got a system in government that is not all the people's fault by any means, because they're using, in the IRS's case, software that was and computer equipment that they're lucky was put in the 90s. For a long time, up until the mid-90s, they were using equipment from the 70s. And that's why Scott was talking about with government, you could cut so much government waste by simply bringing them into the 21st century. And instead of having that group of people in the cave processing government retirements where they would do, 8 or 10 applications a month each, you could be doing them when they were digitizing the files. You could be doing 8 or 10 a day for each person, and you could reduce the employees from, I think it was 2,000 to 200, and produce a lot more work. And so it's not all just the employees. It's the fact that they have not had either the interest or the ability to really upgrade their system. And I guess because it's job security in that particular plant, they had, the person would write it out. They would then put a thing in a box where they'd be requesting a file. Another person would be taking it to the place where the files were stored. Another person would take their vehicle and go look for the file. Another person would look to be sure it was the right file. file and then give it back to the person who drove the vehicle. And, it's like took 8 or 10 people. Whereas if you had it digitized, you could bring it up in 3 seconds on the computer. And it took days sometimes to find it. It had been misfiled. So all of these things contributed to the problems. And that's certainly true of the IRS. It's certainly true of government. And that's why, people that work for government that are great people. And I know people that go to work and they really try to work. But I also know there's a lot of people that work for government that probably should be doing something else.
Any really innovative or unusual ideas that are out there in regards to tax? Like people talk about just a flat tax on everyone, what you spoke about, a pseudo, sales tax, a value-added tax, but more sales tax. What else is out there? What other ideas?
Well, the flat tax, the problem is it's still an income tax. And one of the things, Steve Forbes was a big supporter of the flat tax, still is. I talked to Steve not too long ago. And the problem with the flat tax, it's an income tax. And my question to him was always, how long will it stay flat? Because Congress has every time, like when Reagan reduced the taxes and to reduce the brackets, it wasn't probably a week after the bill was dry when amendments started coming in from lobbyists primarily trying to prove that plan. So the flat income tax will not be flat in probably a couple of years because it's an income tax. Plus, the guy that's hiding his income isn't going to report it just because it's a flat income because he's going to still steal it.
It's like guns. They ain't certain guys of guns illegal. Well, the criminals are going to say, oh no, they're still illegal. But they don't care.
And a lot of the people who are not what you and I would call criminals, but they're certainly not obeying the law. I'm talking about the example of the plumber I gave. I don't think he's out there robbing banks or anything, but he is certainly cheating the rest of us by underpaying what he should be paying in tax. And that's, and I say cheating, he was offering me $75 cheaper price if I paid cash.
Oh, now places are like in New York, I saw they'll have a cash price, they'll have a card price. Because, the merchants, they require them to not get around, the charge, like 3% or 4% charge to use the card. But a lot of places now, they just add it on because they have to get squeezed.
That's right. And it's against the law in a lot of these places to do it, but they still do it. And the states look the other way for the most part. There will be eventually a class action up there where somebody will sue and they'll win against all these merchants. But the problem with regulation is that it's typically not enforced uniformly, and typically it doesn't result in what they want to have happen. Just like you're talking about the merchants, they're getting squeezed. But you've got merchants in New York also that, and I pick on New York just because they're about 9 months ago, and I wanted to buy a present electronic for my grandson, and it was in a little shop, and the guy said, what's the best price you give me? He gave me a price. I said, is that it? And he said, I'll give it to you for $100 less for cash.
Exactly.
Yeah. And he and I both knew what that meant.
Well, you got to. And then, they try to make people feel that, oh, pay your fair share or you're hurting us all. But it's their rules. It's ridiculous.
It's ridiculous. No, it is. And I think that it's being pushed on people by the economic system, by all the overregulation, and by frankly, the income tax system has been a large contributor to that. Because if it was not for that, what that guy would be doing is he would be telling me, you pay this amount, plus you're going to pay the sales tax, federal sales tax, and the state sales tax. And he would not be having to pay it out of his share. He'd be collecting it from me. Now, does that mean that everybody's going to be fair? No, not at all. But the difference is that merchant, like the one I was talking about, he buys his inventory typically from supplier. And in order to not pay a state sales tax, he has a resale permit in New York. Well, that resale permit is on file. So the state of New York knows exactly how much he bought. And if he doesn't sell within a prescribed amount, then the state of New York's going to come and audit him, and a sales tax audit is not pleasant, and they're going to catch it. The current circumstances, he's probably, unless he does it all the time and for a lot, if he does occasional cash sales, he'll never get caught. How are they going to catch him?
Yeah, I don't know. Look, in talking about these tax ideas, you said the flat tax would stay flat for long. So why would anything stay for long? Any great idea, even if implemented, why after a couple of years it would just be undone?
Well, it certainly will be tried to be undone, but the difference between the commercial retail sales tax that we're talking about, the federal level and the state level, is that anytime there is an increase in the sales tax, every single American in that jurisdiction knows it. You can't hide it. And so you've got the pressure of them having to expose it. That's why it's so difficult for many jurisdictions to get an increase in the sales tax. Like they come back and they say, look, we're going to increase the sales tax 1%, but that money is earmarked to repair bridges. I'm making this up, Richard. And that's pretty much the only way they get through it. They're even having trouble getting that done on school bond, school tax, because people are not believing they're going to spend it on the school. They're going to spend it on administration, they believe. So the fact that it's so apparent to everybody, from the youngest purchaser to the oldest, because all of us are consumers, is the protection against it being raised. I can raise the effective rate on the income tax without ever changing the rate. I can simply say, like Congress does, it phases out as your income goes up. Well, I'm increasing the rate to rich. As his income goes up, he gets less deduction, which means he pays more tax. Nobody else sees that. But if it was a retail sales tax, it's 23% today, and they try to make it 25% tomorrow, everybody's going to see it. And you're going to get people demanding, why? It's too high already. Why are you bringing it up higher? What's going on? Now, if you don't get that kind of pushback, then I guess we deserve to get higher taxes, Richard. But at least we've made it clear to everybody what Congress was doing or attempting to do. And honestly, one of the things I get pushback on in Congress from some people I've talked to is they look at me and they say, wait a minute, you mean that every American's going to know exactly what they pay in federal tax? I said, yes. Oh my gosh. Because right now, if I ask you, Richard, how much you paid in federal tax last year, your inclination would be, well, look at my income tax return. Now, yeah,
Complicated, yeah.
that's fine. That's one number, but how much did you pay when you bought that equipment from Amazon in federal tax? You say, wait a minute, there wasn't anything on it, but the people who made that equipment had to pay employees, Social Security. All right, that's included in the price. They had to pay an income tax. That's included in the price. And every step of production, they had to add that in. And so in the price of things you bought, and I'm using Amazon because everybody buys on Amazon, but from anywhere, you're going to find part of that price is income tax and Social Security tax.
Well, that's a great point. What about gasoline or cigarettes? Now you're paying all those taxes that are hit, plus all the other taxes put on.
Absolutely. Yeah, and it's at the level that hits the lowest income people the hardest.
So what is, if you were to average it, what would be the average of the hidden federal, state employment, et cetera, taxes you're paying on buying an item?
It depends on the products, but there have been some pretty reasonable studies done showing at the low end, 10-12%, the high end, 23%, 22%.
At least like 15% is a safe bet, at least.
Yeah, that's the number I use, somewhere around 15%. And so let's say you bought $10,000, I'm making this up, of products retail. You paid another $1,500 in tax, but you didn't know you paid it. Until we discussed it, you may not have ever thought about it. But at the time, I don't get service, you're paying taxes because the people providing that good or service had to put all their costs in. And it's not only employment wages, it's employment taxes and their taxes in order to make a profit and stay in business.
Yeah, that's crazy.
We get rid of all that with a little stack.
If someone says, oh, you need to raise the minimum wage or raise, someone's wage, they don't seem to realize, well, now I'm going to be paying perhaps at a higher marginal rate, at least part of it, but maybe be paying more in tax. If I make 10 an hour, if I go up to 15 an hour, now the 15 is subject to all those taxes at the same rates instead of 10, so I pay more.
It absolutely increases the cost of things. But the other thing that it does, and I think a way that reflects that a lot of the people making these regulations in this are people that believe anything that the Excel program shows is going to happen, because what has been happening is as they raise the minimum wage and threaten it, in California to $22 an hour, I believe is what they're talking, and 25 within a couple of years for restaurant workers.
That benefits the state of California a lot too.
Yeah. But you're getting to the sweet spot, Richard, where there's a point that they can afford to go out and buy a robot to replace a lot of these people. And it's in that $30 an hour range for a lot of these, and it's coming down. But that's been there was a study showing that as they approach $30 an hour, the people they're trying to help with these jobs are going to be replaced more and more by, and I say robots, AI, whatever you want to call it, because it doesn't have to be every case a robot, but it's going to be replaced. And so you can go to a fast food place and you can now have your order taken by an AI robot, and they'll ask you if you want fries or if you want to upgrade to this or that. They've eliminated the employee. And there's actually one restaurant I went to where I went and I actually was paying a robot, not, a sound. They were it was put the money in the slot. And it was,
So don't worry, and they're also asked for tips too. Don't worry. And I noticed too, tips used to be 10, 15, 18%. Then it went to like 15, 18, 20. Then it went 18, 20. Now it's 20, 22, 25%.
right. Yeah. And they look at you funny if you don't do it because that's their income. And, and there's this whole thing that people don't realize that if you make it so expensive for me to go out and have dinner, Richard, I'm going to stay home. And part of that expense is if you're adding 25% to my $30 meal, that may become the tipping point for me where I'm not going to go there. And that is a real issue, I think, that we all want people to do better. I mean, gosh, I feel so much for those people that are trying to get away from those repressive regimes that came over here illegally. I feel for them, but I can't agree that they can break our laws and come here illegally. But that doesn't mean I don't feel compassion for them. I just think you have to have a rule of law and you have to have it balanced so that the people who earn it get it, as opposed to the people who just simply show up and raise their hand.
Yeah. The more they tax people, the more it's going to make people look for ways to avoid the tax. Well, at some point.
And look at and the other problem, and I see this with all around. If you're going to avoid one law, why is it that you're not going to avoid other laws you don't like?
Or if people see that things that are like corrupt, they're going to say, well, everyone else is being this way. Why should I be?
Why should I do it? I speed. Okay. That's breaking the law. I speed. So I don't like the speeding law. I think the speed limit's too low. So, maybe what I try to do is avoid paying for parking, or whatever. In other words, it bill. But every time you break the law, it's like an easier to break the next law. And I think that's been true of the income tax. It's made a lot of people lawbreakers that would never have considered it before. And you've got a lot of people who talk to me. Look, I would say so many times, Richard, I would say, you can't deduct that. That's not a legitimate business expense. And they would say, look, my buddy's doing it. He's been doing it for 10 years and never got caught. He told me I was a dope for not having taken advantage of it and saved the money. I'm going to take it. And I oftentimes would have to say, well, I can't represent you because it's compromising me to help you with that. But that's the attitude that you get is everybody else is doing it. Why don't I?
What would be a sensible posture for someone that works with a good CPA and tax accountant? They own a business. Should they be moderately aggressive? Should they be totally play by the rules? Like, you don't want to pay more than you have to. But then again, if you perceive the rules unfair, like how do you position yourself risk-wise?
Well, it depends on your client. There are clients that want to push as hard as they can. And knowing that it's a risky situation, they could have visits from the IRS and penalties and all kinds of problems. There are other people that want to just sleep well at night. And so your client should dictate how you approach it. But let me give you an example I used to give when I taught this. What is a business like? It's used to be 100%, now it's 50% deductible, but you and I go to lunch and we spend 5 minutes talking about your podcast. And the rest of the time you're telling me about this great rafting trip you took. Now, I buy the lunch because you're my client. Is that a business deduction for me? We spend an hour and a half and spend 5 minutes talking about business. Nowhere in the Internal Revenue Code does it say what a business lunch is. Basically, it's for business purposes. Well, 5 minutes talking to you about business may have kept you as a client for me. And listening to you talk about your trip sealed the deal, okay? You feel really good about Steve, but we only talk business 5 minutes. You can say, that's not a business deduction. And I can say, no, it is, because it's so general. One of the problems with the Internal Revenue Code is it is so general that there used to be a magazine called Money Magazine that every April would give 40 tax preparers the same return. And it'd be a moderately sophisticated, not hugely, but rental property and different types of income. And they literally got 40 different results, 40 different. Some varied one year between the low end, the guy paid 10 grand, the high end, he paid 40, $30,000. And these were real people whose names were going to be put in the magazine and who were trying to
who are they, masters? So what makes like a really top-notch CPA or a tax account? What the magicians, what do they do?
Well, they look at how you structure things. For example, you can have people who are trying to write off their kids' costs for schooling and all, and that was not proper. And I'm talking back when I used to do this, Richard, but I would have a group of MDs, of doctors, and we would set up a lab, and I would have a trust for their kids. Each doctor's kids own the lab. And then I would have the doctors send their tests to that lab. Not increased price, regular prices, everything's fair, but it's a very profitable business. They would then take that money in the trust, and the trust would distribute it to the kids for college or whatever, and the tax rate would be very, very small, usually nothing. So they now took what had been an incorrect deduction they were taking, and they got a better benefit legal. And that's why they paid people like me for tax advice. It wasn't because I said, oh, you can do this or take this deduction. No, it's all right. You want to finance your kids' education? Let's do it the least expensive way. Because the thing back then, the rates were 50%. And if you gave $1 to your son to go to school, it cost you $2. Why? Because you had to make $2, pay $1, and gave it to your son. However, if you did it like I said, you paid $1 to the lab. I'm using an example. You got to deduct it, so it only cost you 50 cents, but the son got the full $1. So you were able to give them money at half price. And that was not because there was some clever manipulation or whatever. Totally legal. I never had it audited and lost. Why? Because it went exactly by the rule. And so that, I think, is where you get into, and a good, in my mind, today, tax advisor is someone who doesn't necessarily tell you, Richard, oh, I can save you $5,000 on your tax return, but tells you, if we set it up this way, you're going to save money over time, but you're not going to have any risk of being audited and losing. Always got a risk of being audited, but of losing. And it's going to be a simple audit because we've done it exactly by the rule. And yes, you may get that art historian who arbitrarily says it's wrong and you end up paying something, but you're not going to get everything disallowed. So it's an interesting area. Their audit rate is going down, and you've got, and ironically, the new commissioner of the Internal Revenue Service, when he was in Congress, Richard, was a co-sponsor of the Fair Tax. He wanted to get rid of the income tax and go to a retail sales tax. Silly law.
But now that he's in power there, he could be totally different. Who knows?
Well, no, I don't believe he's changed his attitude, but he said in his confirmation hearings, look, I was a co-sponsor. I do think it's a better way to tax, but if I'm going to be the commissioner, I'm going to enforce the law. I'm going to collect the tax. I'm going to do exactly what the job calls for, period. And he got confirmed because I think he's an honest guy. I think he really means it. It doesn't mean that he endorses the income tax. It just means it's a law. And while it's still a law, we got to enforce it and fairly enforce it. The guys who are mostly evading the tax are not the people that get W-2 income. They're going to have very little chance to evade tax. Why? Because the taxes are taken before they get it. It's the guy who has a side hustle or the guy who has a business, and he gets the money in and he can allocate it or not report it or whatever. He is making everybody else pay more because everybody else seeing the debt rise. And $1 trillion a year, if we were collecting $1 trillion a year more, Richard, we'd be very close to balancing the budget. And that debt increase is really created by evasion of the incomes. Now, if you got into a retail sales tax, would you have evasion? Absolutely. But a very, very, very much lower amount because there are many fewer people to watch. There's about 10% of the number of retailers as tax filers. And so what you've got is it's an easier easier audit trail, harder to evade. So you're going to have evasion go down. You're still going to get the guy that drives over with a truck of cigarettes from Mexico, or Canada and sells them in New York City. And you're still going to have that, but it's a very, very tiny amount compared to what we have now.
Okay. Well, very good. We're just about out of time. How can people seek you out for help if they need it? How do they get in touch or at least follow what you're doing?
Well, what I would say is go to AFFT, at fairtax.org. Go to our website and you can read about what we're doing, because really and truly, Richard, I'm no longer trying to get, tax preparation clients or tax advising. I'm trying to get rid of the income tax. That's my goal right now. So I would encourage people to go to fairtax.org. If they like what we're doing, join us, and let's get rid of this crazy system, and let's put something in where you get your whole paycheck and you get to decide if you're going to pay tax or not.
Well, very good. Well, thank you so much for jumping on, Steve. I appreciate it.
Richard, I enjoyed it. Hopefully, it got you what you wanted for your podcast.
Yeah.
If you like this podcast, please click the link in the description to subscribe and review us on iTunes.
You've been listening to the Finding Genius podcast with Richard Jacobs. If you like what you hear, be sure to review and subscribe to the Finding Genius podcast on iTunes or wherever you listen to podcasts. And want to be smarter than everybody else? Become a premium member at findinggeniuspodcast.com. This podcast is for information only. No advice of any kind is being given. Any action you take or don't take as a result of listening is your sole responsibility. Consult professionals when advice is needed.